Welcome back to another awesome episode, guys. You won't believe this is happening. For the first time in a year and a half, the CPI data comes out lower. This doesn't show that inflation is over, just that expectations are worse and reality is better. Which potentially could lead to the FOMC becoming more dovish, which leads to less rate hikes. Key to watch, US yields. It's no surprise that a lot of folks are still quite bullish about Bitcoin. Yet the big question that should pop in your mind is, every once in a while, why do we hold on to XRP? Why do these folks love XRP? Always remember, our positions advance a greater good. This is about having the vision to see profits and deploying capital while taking leaps based on the outcome of a well-informed research to make sure we engender a very comfortable future for our third, fourth, and maybe fifth generations to come. This is not guesswork or a gamble. Through research, we find that XRP would exchange hands to the point of controlling $1 billion and even $1 trillion market. Now, also keep in mind that most people who hold XRP do so not because they want to be rich. They hold it because they believe in the technology and want to see it being used by banks and other financial institutions. We have some exciting and interesting news about Ripple and XRP. You won't believe it until you see these happenings yourself. Should you wish to know more about this exciting and intriguing news about Ripple and XRP, make sure you watch this video till the very end. For now, hit that subscribe button and turn on bell notifications. Now to the question, why most people hold XRP? The simple answer is, XLM is the brainchild of one of the two architects of the XRP ledger. Let's say we mention the two most significant cryptocurrencies for cross-border payments. We all know XRP and XLM would definitely pop up in the top 3 charts. I'm talking about digital currencies that are ISO 222 compliant. Now that aside, adding all of that to the number of banks and financial institutions currently in partnership with Ripple through its consortium of such corporations known as RippleNet, which comprises more than 350 banks and financial institutions from around the globe, all of whom would be coerced to use the Ripple-endorsed cryptocurrency XRP in some way or another. Once again, the simple answer to that is XRP is the future. More so, in addition to Ripple's multiple engagements with these experts in the field, especially those with the government and leading financial advisory corporations, you find that the company, Ripple, is definitely a force to be reckoned with. With the addition of Rosa Rios to the Ripple board of directors, with a track record of over 30 years of experience in public policy and investment management. And then we have Michael Barr, a former Ripple advisor, set to supervise the US Federal Reserve with the specific task of influencing policy on cryptocurrencies while serving as a principal banking overseer.
I believe the most important one is that we're all waiting for the Senate confirmation of Michael Barr, a former Treasury official, and that confirmation is expected pretty soon for him to become the Federal Reserve's vice chairman for supervision, which is a really important bank watchdog. It's probably arguably the most important financial regulator in DC. But what's interesting about Michael Barr is that he actually has a crypto background. He was on the advisory board for Ripple some years ago, and so this potentially puts somebody who can sort of speak crypto into a really important job in DC. Now, the caveat to that is that he actually is known as a very strong consumer advocate. He is very much in favor of strong regulations of financial firms. So he may be a tough regulator, but at least he's somebody who's going to understand where crypto is coming from.
And what's even more important and recent is Robert Mitchnick, a former Ripple executive who had also hopped on the Ripple bandwagon, now occupying a prominent role at the investment management giant. And to think that a former associate who had dabbled in the crypto and Ripple space some time ago is now at the helm of affairs at the BlackRock digital assets arm of BlackRock. So why is this about Mitchnick and BlackRock so important? Well, we've already seen its connection to Ripple. Next up, someone might want to ask, what is BlackRock and why is its involvement in crypto so important? Well, let's take a quick look at the company.
The company we know today as BlackRock was formed in the late 1980s. A young Larry Fink launched a firm under the Blackstone Investment Group with 7 co-founders. Fink's team came together under the management of Steve Schwarzman.
We started the business together in around 1988, 89, and they wanted to sell it 4 or 5 years later.
After the sale, BlackRock spent years developing a risk management software that they call Aladdin. Aladdin uses a Monte Carlo-styled algorithm to uncover scenarios in which an investment... BlackRock is a financial giant. It's the largest investor on planet Earth with over $9 trillion in assets. That's a pile of cash equal to about 1/10 of a year's global economic activity. That means the money managers at BlackRock have a big say in how the world runs. Here's CEO Larry Fink talking to CNBC in 2021.
And I've been on your show now probably 4 times every year at the very least for 22 years as a public company, and even longer when we were private, talking about retirement.
BlackRock is indeed influential. In the US, it owns at least 5% of most major companies. That gives the firm lots of voting power to determine how public businesses operate. BlackRock rose to the top of the financial system in a short span of time. After its IPO in 1999, its stock has increased 7,539% through December 2020. Along the way, the company used technology to minimize the...
Arguably, most people would agree that BlackRock's success directly stems from the company's close association with the governments of the world, especially Europe and the US government, as illustrated by the fact that BlackRock keeps getting contracts from the Federal Reserve to manage different assets. Not only that, as the largest American multinational investment management corporation with the Federal Reserve at its foothold, where the Federal Reserve, through market manipulating, known as insider trading, allows this multinational investment and asset management company to make almost accurate investment decisions, which is pegged to technology, but in the real sense is all thanks to insider trading. After all, is it harder to lose when you know the moves before everyone else? But check this out.
Combination of financial markets needing increased technology and there being cheap, inexpensive ways to really scale up technological innovations has led to sort of the confluence of things like cryptocurrencies, robo-advisors, and even more basic things, simply like equity markets being almost completely electronic now.
BlackRock acquired the distressed assets of Merrill Lynch, and in 2009, it took over Barclays Global Investors. At the time, BGI owned the intellectual property rights of iShares. Today, that brand is one of the most heavily traded names in the stock market. About 3 million shares of its fund tracking the S&P 500 are exchanged every day. ETFs, or exchange-traded funds, are at the heart of BlackRock's empire. These funds have taken over investing in the past decade. Companies dominate the ETF market.
BlackRock is by far the largest, with roughly a 35% market share of domestic market. The next two are Vanguard and State Street, both somewhere in, say, the 15 to 20% market share range.
ETFs reshaped financial markets in a short amount of time. More than 80% of all assets invested over the past decade have gone to one of the big three, according to legal scholars writing in the National Bureau of Economic Research. Experts say the financial and technology industries lend themselves to concentration. BlackRock's popularity grew alongside the explosion of interest in passive investing. In addition to individual wealth, BlackRock manages sovereign wealth funds and has a burgeoning private equities division. The company is also a lender to emerging markets in Asia and elsewhere. 78% of the firm's revenue is derived from investment advisory fees collected from products like ETFs, which is why you might have read articles about BlackRock or seen their leadership on TV.
So this letter, you think, is the most important letter you've ever written?
More and more clients are looking for a more sustainable portfolio to be more prepared. Areas that are more impacted by climate change is going to have harder times to finance their debt if they don't focus on the impact of climate change in their district, in their region, in their cities.
BlackRock today is positioning itself as a socially conscious voice of the financial industry. You might hear their leadership talk about ESG.
So it stands for environmental, social, and governance. And the idea is that there are specific issues, whether it has to do with climate change or whether it has to do with boardroom diversity or whether it has to do with how your board of directors is constituted generally, that are important issues for investors.
Through a market share of trillions of dollars, BlackRock has continued to maintain its dominance on all fronts while ensuring that it always stands out. Just as the firm had handled a market value of $11 trillion as far back in 2013, about 7% of the world's financial assets at the time, having maintained a track record of nearly 30,000 investment portfolios. Now, why do I think this relates to XRP, this news about BlackRock delving deep into crypto and installing an X-Ripple executive as its head of digital assets arm? Well, let's take a look at the statement from BlackRock CEO Larry Fink during an interview in 2021, coupled with the idea that an X-Ripple advisor is set to supervise the U.S. Federal Reserve, and you tell me.
That there's a chance that the green transition will push up prices and political tensions worldwide.
Big public companies and banks are now being cast as a role of an admission police, having to cut off businesses or lending to companies, often smaller companies that have not yet reduced their own admissions. This will have the unintended consequences of fueling a backlash against our big companies, and it will promote a narrative of big versus small, and will create greater and greater political polarization.